Formation of market structure. There are two similar ways to understand how market structure forms. SMC, smart money concept. LIT, liquidity inducement theorem. First, let's start with SMC. Let's say price starts moving up and breaks a high. Here, we say a BOS, or break of structure, has formed. Then price pulls back a bit, moves up again, and breaks the last high. Here too, we get another BOS. Again, price goes up, breaks a new high, and we get another BOS. Up to this point, the market structure has been bullish because the highs keep getting broken one after another. But later on, price goes up, but this time it doesn't break the high. It comes back down and breaks the last low. At this point, we no longer have a bullish BOS. What happens here is a change of character, meaning the market's behavior has changed. Before this, the trend was bullish and the highs were getting broken. From this point on, we expect lows to get broken because the trend has turned bearish. If price had gone up again and broken the high, we would have had another bullish BOS and a change of character wouldn't have happened. But suppose that same low gets broken and the trend changes from bullish to bearish. Price comes down and a bearish BOS forms. Again, price moves down and another bearish BOS forms. But later on, this time, price doesn't break the previous low and turns back up and breaks the last high. Here again, we get a change of character, but this time, it's bullish, meaning the trend changes from bearish to bullish. From here on, we expect highs to get broken and bullish BOS to form. Price goes up and breaks a high, and a bullish BOS forms. Later on, price goes up again and breaks a new high, and another bullish BOS forms. What we've seen so far is how market structure forms through the SMC approach. Now let's go back to the point where the change of character happened and we said the trend had turned bearish. Here's the big question. How likely is it, really, that once this low gets broken and a change of character forms, the market actually turns bearish and price starts dropping? The truth is, a lot of the time, it doesn't go the way traders expect. A lot of the time, that break is really just a trap for retail traders, and only in a small number of cases does price actually move into a bearish phase after that low gets broken. Most of the time, even though it looks like a change of character happened and the trend is turned bearish, price goes back up and a new bullish BOS forms. This is where LIT looks at it differently. In LIT, when that low gets broken, it's seen as a liquidity grab, meaning the market just takes the liquidity below that low and nothing more. So this move isn't a real change of character at all. In this view, that zone was basically liquidity that got taken, and from here on, we call it inducement, or IDM for short. So in this model, the breaks we used to call BOS aren't really valid BOSs at all, and the highest level formed from the start of the move until the IDM breaks is considered the valid market high and the true BOS level, and all those moves we used to treat as BOS were actually just pullbacks. Now let's take a closer look at how market structure forms in LIT. Suppose the market is in an uptrend. Price moves up, and after that, a pullback forms. Once a pullback forms, we draw the IDM level from the low of that pullback, which is the pivot low. Now two things can happen. Either price comes down and breaks the IDM level, or price keeps moving higher and a new pullback forms. Here, price moves up again, and a new pullback forms. In that case, we move the IDM level to the low of the new pullback. Then we wait again. Either price comes down and breaks this new IDM, or price goes up again and a new pullback forms. Price goes up again and a new pullback forms, and again we move the IDM level to the low of the new pullback. Then we wait again. Either the IDM gets broken, or price goes up again and a new pullback forms. Here, price goes up again and another pullback forms, and we move the IDM level to its low. This time, the IDM level gets broken before a new pullback forms. Once the IDM gets broken, we take the highest point from the start of the move up to the moment of that break as the BOS level. Then we wait. Price moves up and the BOS level gets broken. In an uptrend, once the BOS level gets broken, we take the lowest point from the start of that BOS up to the moment it breaks as a valid low, and from there we draw the change of character level. the trend is still bullish. And from here, we start identifying pullbacks again so we can draw the IDM level from their lows. But here, before the BOS gets broken, we already had a pullback. So before a new pullback forms, we use this pullback and draw the IDM level from its low. Like before, we wait to see whether price breaks this level or moves back up and forms a new pullback. Here, a new pullback forms, and we move the IDM level to the low of this pullback. Again, we wait to see whether price breaks this new IDM level or moves back up and forms another pullback. Here, the IDM level gets broken. Like we said, when IDM breaks in a bullish trend, we treat the highest point from the start of the move up to the moment of that break as the BOS level. Now we have a BOS level and a change of character level, so we stop looking for a new pullback or drawing a new IDM and wait to see which one price breaks. Price comes in and breaks the change of character level. This is the point where, in LIT, we finally say the trend that was bullish up to here has now turned bearish. When the change of character level breaks to the downside, naturally, we expect price to move lower from that point on. In this situation, the previous bullish BOS level becomes our bullish change of character level, because that's still our valid high. From here on, we don't draw the IDM level from the lows of bullish pullbacks anymore, and we have to draw it from the highs of bearish pullbacks. First, we check whether there was already a bearish pullback before the change of character got broken. If there was, we draw the IDM level from the high of that same pullback. If there wasn't, we have to wait for a new bearish pullback to form. Here, before the change of character gets broken, we already have a bearish pullback. So we draw the IDM level from the high of that pullback, meaning from its pivot high. Then again, we wait to see what happens. Either price comes in and breaks the IDM level, or price moves lower and forms a new pullback. Here the IDM level gets broken. In a bearish trend, when IDM breaks, we take the lowest point from the start of the move up to the moment IDM breaks as the bearish BOS level. Now again, we have a BOS level and a change of character level. For now, we're not looking for a new pullback or drawing a new IDM, and we wait to see which one price breaks. Here, price goes down and the BOS level gets broken. When a bearish BOS gets broken, we take the highest point from the start of that BOS up to the moment it breaks as the valid high and the change of character level. As a result, the change of character level is no longer here and moves to this new level. If this level gets broken later on, then we say the trend has turned bullish. But for now, because the bearish BOS has been broken, the market is still in a bearish trend. So we're still looking for bearish pullbacks. But let's see whether there was a bearish pullback before the BOS got broken. Here, before the BOS got broken, we didn't have a bearish pullback. So we wait for a bearish pullback to form. Here, a bearish pullback forms, and we draw the IDM level from its high. Then again, we wait. Either price comes in and breaks this IDM level, or a new pullback forms. Here, IDM gets broken. In this bearish trend, we take the lowest point from the start of the move up to the moment the IDM breaks as the new bearish BOS level. Now we have a bearish BOS level again, along with a bullish change of character level. For now, we're not looking for a new pullback, and we wait to see which one price breaks. Price moves up and breaks the change of character level, so the trend shifts from bearish to bullish. Once the trend turns bullish, that valid low is no longer our BOS level and becomes the bearish change of character level instead. As price continues higher, it breaks the change of character level, confirming the shift from bearish to bullish. From here on, we go back to looking for bullish pullbacks, so we can draw the IDM level from their lows. But before that, we check whether there was already a bullish pullback before the change of character got broken. Here, before the change of character gets broken, we already have a bullish pullback, so we draw the IDM level from its low. Then we wait. Either that level gets broken, or price moves higher and forms a new pullback. As the move continues, price breaks the IDM level, and we take the highest point from the start of the move up to the moment the IDM breaks as the BOS level. We're no longer looking for new pullbacks or drawing the IDM level. Right now, we have the BOS level and the change of character level, and we just have to wait and see which one breaks. Price moves up and breaks the BOS level. We treat the lowest point from the start of the move up to the moment the BOS breaks as the change of character level. From this point on, the change of character level shifts to this new level. That's how market structure forms in LIT. The valid highs and lows are the points from which the BOS and change of character levels are drawn. and the rest are just internal fluctuations. This part was a little complicated, and you'll probably need to go through it a few times to really understand how market structure forms in LIT. But don't worry, Index Algo handles all of this. We only explained it so you understand how the indicator works and can use it better. Internal structure. Look, I want to challenge something you've probably been dealing with for years, and that's the use of multi-timeframe analysis. When you analyze the market on a timeframe like the 5-minute chart, and a structure forms there, looking at that same structure on the 1 5-minute chart basically means you're combining 3 5-minute candles together. And when you analyze the 30-minute chart, you're basically combining 6 5-minute candles together. So whether you combine 3 candles, 6 candles, or any other number, you're still using an arbitrary number. Instead of using multi-timeframe analysis, it makes much more sense to stay on the same main timeframe where the structure is forming and use the internal structure inside that same timeframe. This is much more logical and much easier to defend than bringing other timeframes into your analysis. Sometimes in the market, price gets trapped between a valid high and a valid low. In other words, when we have both a BOS level and a change of character level at the same time, based on what we explained in the Lit Market Structure section, we stop looking for a new pullback or an IDM break. In this situation, price is just moving between those two levels, which are the valid high and the valid low.